Hello, this is Brian Shannon from alphatrends.net. Today is Wednesday, the 30th of April, 2008. On Wall Street today, we're looking at shares of Research in Motion, symbol RIMM. And looking at this monthly time frame to start out, you can see that the stock broke past a little bit of resistance around that 30 area in late 2006 and has experienced a very nice rally there, went sideways for a little bit, and that's where the real uptrend really began. It saw the stock rally from about $50 a share up towards the all-time highs, just about 137 or so. And then we saw the pullback, and looking at a weekly time frame, you can see that it pulled back to a rising 200-day moving average. That 200-day moving average never turned sideways or lower, and that's what kept the buyers in control of this longer-term trend. Now, I'm sure there's a lot of people who are looking at this stock right now and saying, well, it looks like a double top. Just because a stock has found resistance in one area, a year or so ago, doesn't mean it will once again. It has the potential to be a double top, but a true double top is only known well after the fact, in particular when you're looking at a longer-term time frame like this. The way a double top works is the stock finds resistance at point A, pulls back to point B, finds support in there, and then rallies up to that point C again. And what happens at point C typically is the stock then pulls back. Now, a lot of people on the first little pullback, maybe to 120 or 115, will say, see, the double top has been completed. But if you look at a technical analysis textbook, what really occurs is you need to see the uptrend line broken, and then you need to see point B taken out. Once point B has been taken out, what we typically see is the stock will break down, make what's known as a return move, and then it's short to sell the stock based on the double top. And the double top, we would be looking for a pattern, a height. We'd look at the height of the pattern, which is from 80, let's call it up to 125, just to be conservative, 45 points. We would subtract that 45-point height of the pattern from the breakdown point at $80 a share and come up with a target of 35. I'm not calling this a double top. I'm saying it's not a double top, in fact. So what instead we want to look at is, here's a stock that's found resistance in this area once before, but it does not mean we're looking at a double top. When we look at a daily time frame, what we can see here is the stock has recently, that is back in mid-March, broken past some resistance. Now we've got a rising 10, 20, and 50-day moving average. All of those moving averages are above a rising 200-day moving average, and the buyers are firmly in control of this stock. This is a very healthy looking stock. There's nothing here that indicates anything that the sellers are taking control. We've seen the stock find support at the rising 10-day moving average, then the 20-day moving average, and now it looks like it's beginning another thrust higher once again. I think it probably ought to go on to new highs. It doesn't look like 140 or so is unreasonable from this point, but the definition of an uptrend is higher highs and higher lows. We clearly see that that pattern of higher highs and higher lows is intact, and right now the only thing that would interrupt that pattern of higher highs and higher lows would be a move below this low that we saw about 3 days ago. That level right here is at about 117 or so. So I think as long as this stock remains above 117, longer-term investors are still good with this stock. And on the short-term basis, I think that looking for an entry, a little bit further pullback, maybe to this prior level of resistance, and then a resumption of the uptrend, looks like a great entry point for this stock.